Well, good morrow, traders. Uh, I, I'm so sorry about the new video recording. I'll definitely up my game if I get some good feedback in the comments and some likes on my content. Really hoping this helps you guys. I have tried out several trading platforms, usually getting my money back before the 30-day trial ends. This one, I've been looking into trading, trying to learn more about it for a few years now, and I would call myself getting towards the intermediate as far as my abilities at this point. But what I've been noticing is I need a little bit more of an edge, and this software caught my eye. Uh, I don't know, it popped up on my YouTube feed somehow because I'm always looking at stuff like how to trade options and trading strategies and things like that. So it's the Rockwell Trading Power X Optimizer software. And when you sign up for that, it can be had for, it seems like the retail is 3,000, but as I understand it, there's no subscription. You just keep it for life. And they're upgrading it. They already upgraded once or twice in the week that I've had. And it's got two parts now. The wheel part is relatively new, and they have this Power X analyzer. I guess major differences here are that you can start with Power X analyzer. All that does is it would give you recommendations to buy stocks for the options of those stocks a lot of the time, which means that the money you would need would be enough to buy 100 shares. And typically, they recommend these settings in the scanner. These for the other one, this one. And typically, you're talking about stocks between $5 and $30. I bumped it up a little bit. But let's say worst case scenario, you bought a stock like Facebook is around 330 right now. If you were assigned to buy one contract, one options contract worth of those shares, you'd end up getting on the hook for $33,300. So you would need enough in your account to cover that purchase if your option is assigned. That would be a put option. But with PowerX, where you're just buying stocks or options, your risk is just the cost of the stock, which they don't always say to buy 100. Well, this one they're saying buy 250, but what they're assuming is your account size is 2,000. You could actually get away with probably an account size of 5,000, possibly less, but I think they're recommending 5 to 10 for this strategy. And I would say this one's a little more risky, and my understanding is in recent months, we're in early mid 2021, they have recommended against using this as your primary trading strategy. Maybe like a fifth of your money to go to that to this side. But the wheel is the one that's more of a dependable, consistent income. So that's why we're going to focus on this today. And they kind of say if the stock market is generally going up, PowerX, buying stocks and options would be better. The wheel is more selling options, and that does better if the market is slightly uptrending or sideways, and you're catching all these dips up and down within a zone. So they recommend that you start with paper trading account, simulated account, which Thinkorswim offers. I think you can sign up for it with no deposit, but it seemed like it was easier to just put $50 in it and sign up for it. And then there's another one I've heard of, it's called a simulation account in Investopedia, and there's other brokers have them. But Thinkorswim is pretty popular because it has so much capacity, and look at all this data. It's really overwhelming at first, but I'll just tell you what I know, and I think is enough to get by, at least as a beginner. So anyway, we'll go back to the scanner. So the wheel, and like first example, I've sold a Baidu put that expires June 18th, and I got $1.95. So you always multiply these by 100 because options come in 100 packs. There's no other way. So all these premiums mean 100 times, so $195 that I would get in 8 more days. I think I've had this less than 2 weeks total. And if it gets close to that amount, you can actually close it early and just take your money and run. But if you let it go all the way to June 18th, as long as the strike price is not reached, then you just keep the money and you don't buy the stock. And then the cool thing is you could just do it again over and over. So it's the wheel. So basically the wheel, in short, I'll just summarize here. You sell puts. You hopefully can do this over and over. At some point, you're going to be assigned. Best I can tell, that seems to happen maybe 1 out of 5 to 1 out of 10 times from what I've experienced and what I've seen other people experience. But of course, that depends, like how close your strike price is to the actual stock price, they call it, at the money. And another thing I learned is if you sell a put, or I guess I call it too, like as long as it's not the last day or two before expiration, you're probably not going to be assigned. So that, like, if you're selling a put, it gets down to the 182, let's say, your strike price is 182.50. That person who bought that put contract has the right to make you buy those shares at that price. So you'd be losing 50 cents a share, right, on 100 shares, so $50. But they almost never do that from what I've heard, unless it's the last day of the contract expires or maybe a day before. So, but if it happens, no big deal. What you do is you go further down on their software here, and then you'd be selling calls on it. So you own the 100 shares, and now you say, you know what, I'm willing to sell those shares at a certain strike price that what's recommended is the price you bought them at or higher. So if they did get assigned, then you would actually make a little money on the shares as well, or at least break even on the shares and still keep all your premium from the puts and the calls. So anyway, step 1 is selling puts, hopefully over and over, not getting assigned. But once you do get assigned, well, then you just turn around and you sell calls on the shares that you have. And then once those shares are sold to somebody, your call hits the strike, then you just start over. Could be the same company when the numbers are right. The scanner is one of the things the scanner does for you is figure out, is it worth it? And then of course there's a lot of other companies. So I got Baidu, Foot Locker, FCX is a mine company, X is a steel company, Z is a Zillow, a real estate company. Got that Micron something, Riot and Mara, I think are crypto plays, not actual crypto, but businesses that fluctuate similar to crypto. And then this is L Brands, and this is Victoria's Secret and other stores. LVS is a Las Vegas resort casino. Another one that's out there is called Wynn that I really like. Wing is like your doorbell thing. I forgot what that one is, and I forgot what that one is. I don't know much about those companies, but their charts look good. This is Royal Caribbean Cruise Line. And speaking of travel, we have American Airlines down here. Toll Brothers is a house builder. BH Fortin, I think it is. Abercrombie and Fitch, iRobot. So, and you know, see these numbers, like this is even half true. I'm going to be precise, but you know, 40s. Let's go, yeah, 180%. Check on the current price. But you know, these are all stocks where I thought about it, looked at the chart. I wouldn't mind owning those for a while, and the price seems like it's pretty stable where it is. It doesn't, the chart doesn't give an impression that it's just going to drop. Let's look at Freeport McMillan, the mining stock. Coming up here in a second. Yeah, so the strike on that one was 38. So down here. So it's kind of last couple of months. That's fine. If you go back further, it does tend to get up that high. So this one's, I guess I would say this one's a little riskier, because if it does lose its footing here and go below, well, we're talking about maybe a little bit of support there, and then kind of getting down into 31. I would say, yeah, that's pretty reasonable expectation. So, you know, maybe you hold it at 30, 31 for a few weeks or even a couple months until it comes back up. And meanwhile, you're selling calls on it, making premium. So that's the idea. Anyway, so I wanted to show you what I got so far as a noob. You know, they give you this paper trading account with 100 grand in it, and I'm already down to what, well, it's funny, the net liquid is really high, but I'm on the hook to buy a lot of stocks. So here are my trades thus far. So these are working orders. They haven't gone through yet. Kind of the same thing. I put the limit a little too high, and if I execute, I got a great price. If it doesn't, well, I'm not that upset about it. So I put those working. But this is what I currently own, and like there's the Zillow. Xpain was a play on another strategy I've been playing with. I love my EV stocks. So we'll ignore that one. I think United Airlines was another put. So I got 3 airlines now. Here's that Toll Brothers, and you see over here the trade price is what I earned, and you get this money instantly in your account. You get the money from the put that you sell. It goes straight into your account. It's yours forever. But $39, like in this example, but this stock is trading at $40.23. So if I was forced to buy 100 shares of it, I'd be paying what 4,023, right? And so I guess that's what this is. I guess with a little commission, 4063. It says kind of like a loss, but this is not a loss unless you are forced to buy the stock and it drops to 0. So that probably wouldn't happen. So relatively safe strategy. And when you look at these puts that they're recommending in the software, I'm typically seeing deltas of like 25, give or take, maybe 20 to 25. And delta, if you don't know already, is just kind of a proxy for the odds of the trade executing or the shares getting assigned. So if I sell this June 11th put at strike price of 40, then this chart doesn't have delta, but if the delta was, let's say, 25, then that means there's a 25% chance that I would get assigned, that the stock would go below the 40 by expiration, I'd get assigned. And then, so that means there's a 75% chance that I just take the $39 and keep it, and that's just a week. So when we add up all these numbers, which I haven't done yet, I wouldn't count the Coke one. That was another side hustle I'm doing. But all these numbers, so this is kind of rattle them off here. $20, 45. Yeah, that was one that I believe Power X recommended. The call was me doing another strategy though. So 20, 45, 191, 78. That's like what? It's like 200. Call it 300, probably 350, 450, 500. Skip that one. 550. Call it 600, 750, 800, 1150, I would say. Probably just, okay, and then 12, 13, 14, probably it was 1500, 1600. I'm probably going to gather some, well, I wouldn't count this next thing one, so around 1400, I guess that was, just ballparking it. And that's in, none of these expire out further than June 18th, but the ones I'm not counting. So in like 2 weeks, I started this probably Monday. I remember I got it over the weekend, studied up a lot. I've been at it since Monday, June 7th, and these expire in 2 weeks. And I'm not even done trading yet. So some of these will expire tomorrow, June 11th. I'll probably buy some more. But there's a lot of money going on the hook for. But you see that I have a $100,000 paper account here, and I still have 45,000 in buying power. So I'm only really about halfway there. And yeah, that's the kind of returns that they claim with using this strategy. The nightmare for me is if you sell a put and you get assigned, you have to buy 100 shares of the stock for each contract that you have sold, and then the stock just plummets, right, and never seems to come back. That's the nightmare scenario here. So fortunately, from what I gather, you only get assigned maybe, like I said, 1 in 5 or 10 times. And out of those, let's say 1 out of 10 times, you would only have a bad situation like that where the stock drops too rapidly that you can't make enough premium on calls to be worth it. So you end up just kind of holding the stock, or you could, of course, just sell it back at a loss. But the goal is to never have a loss, right? So you would probably need to hang on to it a few weeks. You have to kind of dig deeper into that stock and get a sense of, do I believe this will turn around, or am I starting to lose hope? And let me just cut my losses. Unfortunately, it sounds like it doesn't happen that often. So that's one thing I'm looking out for. I'm trying to learn from Markus Heitkoetter, the lead of this whole Rockwell trading, and he had a couple examples where that happened to him. One was under TQQQ, and the other under Ride. That's still going on, as I understand it. Went down a lot. Ride recently, loaders. Anyway, I want to keep the video short, so I thought I would introduce that way. Please give me some comments, give me some feedback, like and subscribe, and I will promise to improve video and audio quality if I can get some good feedback, and I'll keep it coming. I'll tell you how this is going, and if I'm losing money, and pretty soon, like they just recommend 4 weeks or 40 trades of paper trading to kind of make sure you know what you're doing before going with real money, and I probably already have 20 trades done, but it hasn't been in 4 weeks. But I think maybe in 2 or 3, I'll be ready to put a little bit of real money on the line. So hopefully, not embarrassing myself in front of all of you, but you're definitely welcome to accompany me along this wild ride. All right. Okay, guys, a stock came up on the scanner that I would be comfortable owning. So that's what you're basically looking for. First step, would you be okay owning the stock and at the price that is the strike? So you're selling puts. So if the strike price is 32.50, you want to be comfortable in case you do end up owning 100 shares of the stock at 32.50. That's almost where it is, but 32 right there. And so recently, this is since it got over there mid-January, and it basically stayed above that 32.50 range almost all that time. So that's good short term, but long term, is this the highest it ever got? Well, look back, we got COVID in here, all the retail stores got crushed. Not surprised. The Nordstrom generally hangs out like at least 35, and 40 to, let's say 40 to 55 range is pretty reliable in normal times, and it even has gotten about 80 at times. So yeah, 32.50. I wouldn't mind owning Nordstrom at that price. So you see that, and then jump over to your platform. I got a paper trading account. Take your swim. You want to be in the trade tab. Plug in the stock symbol, and then the option chain will show up, and we're on the June 18th time frame, just like this had said, June 18th, and you're looking for a premium of 27 cents by selling this put 32. Let's see. So put size always on the right here, and the call is always here. It's pretty much the same in other platforms as well, from what I've seen. And there it is. So if you click in the bid column, double click that, it's going to show up as a sell order, but you could sell it anywhere between the bid and the ask, and you see a recent trade was 30 cents. So around 30 cents, you probably will be able to sell it pretty quickly. I usually, as a noob, I'm starting this out in kind of greedy way, conservative way. I ask for the ask price 32. So the risk here is that it might not get filled, but that's okay. There's a lot of other opportunities. I already did like 20 of these already on other stocks, and the upside is if it does execute the trade, you're getting a much better price. So we'll go for 32. We're going to confirm and send, and then if it's during market orders, I would give that a couple of minutes, maybe even all day. If I really want it, I'll increase that price a bit and see if I can catch it. But stocks fluctuate up and down all day, so there's a good chance you give it a couple hours. This is I'll get to a minute chart. It's a Nordstrom went up and down. So if it was a little lower, like I guess it's about as low as it got, but if it got a little lower, maybe I don't know, 34, so it probably would execute at that price for the option, the put option. The lower that stock price because the more valuable your put cell will be. Anyway, so just wanted to show you that real quick. Keep this one short. Have a great day.